Hey, what's up? What's up, guys? How you doing? What is happening, man? It has certainly been a while. Man, boy, it has really been a while. It's been a while, right? Hey man, I hope you're having a great day today. It's a fabulous, fantastic Monday, and I'm going to be sharing some amazing information with you today. So this always happens. I always sneeze when I start doing a live for some reason. But anyway, um, if you are a hairstylist or a barber, hey man, definitely stay tuned to this live. But also like it and share it so your colleagues, your peers, so some other people can also get this information as well. All right. So I always like to honor your time, and so I like to really get started on time. So, in keeping with that, I am going to get started on today's presentation. So let's get right into it, guys. All right, so this is an absolutely free webinar, and I am going to be talking about how to protect and prosper beyond the chair as a hairstylist or barber. So if that's something that interests you, you are definitely going to want to stay all the way to the end for this powerful presentation. So hey, listen, are you a hairstylist or a barber? Are you a salon suite owner? Are you someone who is in some way affiliated with the beauty or barber industry? If so, if you're like most people, then guess what? You probably want to live in a pretty nice house, right? You probably want to drive, something nice, a nice car, right? Or you might want to drive something really nice, right? Maybe you want to go on nice vacations, or maybe you just want to spend time with your with your wife, your significant other, your best friend, right? Maybe you want to spend time with family, with people, go on vacations with people who love and care for you. People you want to spend time with those people that you absolutely love and care about. That's what the American dream is all about, right? Wouldn't you say that's what it's all about? But how? The American dream has become even more difficult, seemingly to attain as of late. And so, we want to be able to talk about how to do it because more people are experiencing financial insecurity than ever before. 65% of U.S. consumers report their finances are unstable. And so, what does this do to? We're looking at a situation where 44% of Americans do not have enough cash to cover a $400 emergency. We're talking about 43% of student loan borrowers were not making payments before President Biden started forgiving these loans. The average credit card debt is roughly about $9,300 a month. And 33% of American adults have zero retirement savings. Guys, I know this might seem a little fearful, and people really don't like to talk about these situations. People don't want to let someone know that they may not have everything together. But let me tell you, 63% of Americans have a fear of running out of money in retirement more than they fear death. Let that sink in for a minute. If you happen to be someone who was able to make it to retirement, 63% of those people would rather die, to be honest, than see their money run out. And that's a scary thought, guys. That's a really scary thought. So what is it that we're facing? What are we challenged with? We're challenged with the high cost of living. Many of you know that inflation has been, pretty high as of late. We know that the cost of housing, cost of food, cost of Medicare, cost of education, gas, but we know everything has been going up astronomically. We know that we face challenges when it comes to saving for retirement, obviously because the cost of living is so high. We know that, again, college funds, if you happen to have children that you want to send off to college, again, that becomes difficult. Home ownership, particularly as it relates to hairstylists and beauty professionals, we know that the industry has been changing. We know there's been changing and becoming even more challenging because the economy has changed, but consumer demands have changed as well. We know that medical expenses can sometimes be an issue or a problem. And unfortunately, there are times when a spouse, a breadwinner, or significant other unfortunately passes away. These are all challenges that we all face, no matter what industry you work in, no matter what you do for a living. These are things that we all are having to deal with. Now, if you happen to be a beauty or barber professional, here are some things that we tend to deal with in particular that a lot of times people don't want to talk about, but let's look at them. Number one, we have a lot of hairstylists and a lot of barbers, a lot of salon owners who underreport their income. When it comes time to file taxes, many people are underreporting their income, which then means, number two, that Social Security, right, is going to be even smaller because people are not fully reporting their income. See, Social Security is meant to cover roughly about 40% of your pre-retirement income. Just imagine, ask yourself right now, could you live on 40% of what you're currently bringing in? That's what Social Security is supposed to do. And it's even more difficult, again, if you are not fully reporting your income. So many people are going to have some problems when it comes to retirement. The average Social Security monthly benefits is roughly about $1,700 a month. Imagine trying to live off $1,700 a month. What a lot of people also don't talk about, beauty and barber professionals are just one slip or fall away from not being able to pay bills, for losing their home, for not being able to cover car payments. One slip or fall away. And as we begin to age and get older, we know that 70% of us, whether we are in the beauty industry or outside the beauty industry, will need some type of long-term care, whether that be in-home, assisted living, or some type of nursing home care. 70%, guys. And so at the end of the day, the question becomes what we have been told to do in order to build wealth and get prepared for retirement. Those traditional ways of building wealth and those traditional ways of saving and investing for retirement don't seem to be working as well. We're talking about banks. We know that banks, the savings rate is abysmal. It is ridiculous. The savings rate it's not even pennies on the dollar. It's less than a penny on the dollar, right? So we know putting your money in the bank, saving your money in the bank is not going to help you outpace inflation in order that you might have enough money to be able to retire with. We got 401ks, IRAs, TSPs, and 403bs. These are all employer sponsored retirement programs. Guess what? If we happen to be beauty or barber professionals and we're self-employed, we don't have those options. We don't have those things available typically, unless you work as an employee for a company, for a salon, right? Typically, most of us are self-employed, which then means often the 401k, the IRAs, the TSPs, and 403bs are not available to us. If we are fortunate and we know and understand the importance, hopefully we are putting our money in a SEP IRA, a simplified employee plan IRA, or a solo 401k plan, right? People often try stocks, crypto, and real estate. Each one of these things have their own set of risks associated with them. Let's look at the problems associated with 401ks, IRAs, and 403bs. Number one, the fees. The fees associated with these. For instance, if you look at 401k fees, they roughly range anywhere between 0.75% up to 1.5%. What does that mean for you? That means that if you are fortunate enough to be able to save and grow your retirement nest egg to $400,000 before retirement, guess what? That means you're going to pay anywhere between $30,000 to $60,000 in management fees. Management fees. These are fees that you pay year in and year out, whether your money makes money or not. This is the money. These are the fees that they're charging you to manage your money on your behalf, right? So the first issue that we got fees that we got to look at. What else? We got the risk of losing your money. When you have your money invested in a 401k, IRA, a SEP, when you have Roth accounts, all of those accounts, or just straight up brokerage accounts, all of those accounts are directly invested in the stock market, which means there is a risk of you losing money. If you happen to look at this, these are the last roughly 20 years of returns for the stock market. Those blue lines obviously are the positive years. The red lines are the losing years, right? Now, if you average these things together, this means that on average, every 4 to 5 years, the stock market is going to lose money. That's what this means, okay? Which then means if you have your money in the stock market, then you're likely to lose money. So the stock market is very volatile and is subject to loss. And it's even more volatile given that global events around the world can affect what happens within the U.S. stock market. It could be a war in Africa. It could be OPEC gas prices going up. It could be a war on the Suez Canal, which then means your goods from China can't get to you. Supply chain problems, right? We all remember those supply chain problems, supposedly, when we couldn't get goods and products from China back during the COVID years. These are things that all affect the stock market. What else do we have? We got to deal with taxes. Each one of these accounts that you see, these are called tax deferred accounts, which means if you have your money in each of these accounts, you're going to have to pay tax on the money that's put into the account and the money that grows from the money that you put into the account, which then means later down the road, particularly when you're ready to retire, when you start accessing this money, guess what? Taxes are gonna come due, right? And so now you got a tax issue. Again, if we go back and look at if you have a $400,000 retirement balance, right? On average, if you have an average tax rate of 25%, guess what? $100,000 are now going away due to state and federal taxes. That means you only got $300,000 left. So when you put it all together, if you were fortunate enough to save $400,000 for retirement, After paying for fees, after paying for taxes, guess what? You only get a chance to keep $270,000 of that. So the question becomes, how long is that $270,000 going to last you in retirement? See, these are all things that many times people don't think about. When I posted this post saying that I was going to do a webinar, someone asked me, what do I have to, what am I protecting myself from? These are the things that you're protecting yourself from. You're protecting yourself from fees. You're protecting yourself from taxes. You're protecting yourself from one slip and fall, keeping you from being able to work behind the chair. If you happen to be out for what, 1, 2, 3, 5 months, how long would it be before you can't pay bills? How long would it be before house goes into foreclosure? Before you lose your car? These are all things that you have to protect yourself against. Fortunately, if you haven't, had someone want to sue you, right? If you have your money tied up in these accounts and you are not protected from a liability standpoint, that becomes another concern that you have, that someone could possibly sue you and try to take your retirement nest egg. These are all the things, guys, that you want to protect. You want to protect yourself from missteps. You want to protect yourself from costly mistakes. You want to protect yourself from volatile stock market and losses in the market. These are all things that you want to protect yourself from. So what if you could get stock market returns tax-free? So what if you're able to get stock market like returns and you didn't have to pay taxes on that money? How about, what if you could grow your money without the risk of losing it? How about that? How about you being able to access your money before you reach the age of 59 and a half without penalties and without fees? What if you're able to get retirement income that never runs out and is also tax-free? What if you could actually protect yourself, protect your family, and protect your assets? Guess what? There's a way. How many people would like to see that? I'm curious. Guys, show of hands. Can somebody show me? What do you think about that? So let's go ahead and let me just go ahead and share it with you. Okay. Did you know there's another wealth building tax code? See, that 403B, that 401k, those are nothing more than tax codes, nothing more than IRS tax codes. And it says that if you have a 401k, it's an employee sponsored retirement program. It says that whatever monies you put into it, you're able to write that off in your taxes. This is how it gets treated in the stock market. See, that's what that 401k code spells out. 403, that's what it spells out. 457s, that's what it spells out. But there's another wealth building tax code that I discovered. And I discovered this, unfortunately. This is my father. And it's unfortunate, but I discovered this when my father passed away. When he passed away, he did not have significant assets because he was actually disabled at the time, or going out on disability. And so he did not have life insurance, and he didn't have significant savings at that time. And when he passed away, as a family, we had to take care of those final expenses, right? And so it was during that experience and living through that experience, it made me say, hey, I don't want my family to have to grieve, losing me, and then on top of that, have to figure out how to take care of my final expenses. So it led me to start looking and researching and trying to figure out how to do this. So there's actually a code called 7702A account. And what does it do? It says that, hey, there is no limit on the contributions that you can make to it. Okay? Because guess what? You have limits if you have 401, if you want to put money in a 401k, if you want to put money in an IRA, if you want to put money in a 403b, there are limits to how much you can put into each one of those. If you happen to be someone who has a Roth account, your Roth account says, hey, you can't even put money into a Roth account if you make too much money. So that becomes if you make too much money, that becomes something that's off limits to you. So with this 7702 account, there is no limit to the contribution amounts that you can make. The 7702 account grows tax-free. There is actually no risk of losing money in the stock market ever. Okay? So again, this is how the 7702 account works. So you see the red line. So if you look at the dates, right, on this red line, those are the actual returns of the stock market during this period. So as you can see, it's up, it's down, it's all around, it's bouncing, it's doing its thing, right? But you see that blue line, that's the 7702 account on that blue line. And as you can see, it never suffers any losses. Never has any losses. And Warren Buffett, one of the richest men in the world, says you never, ever want to lose money. That's the first rule of investing. The 7702 account is the only account that does that. What else does it do? You can access it before you reach 59 and a half without taxes and penalties. If you happen to take out a loan with your 7702 account, you can choose not to pay it back if you don't want to. It's entirely up to you. Unlike if you make, if you get a loan with your 401k, guess what? You're gonna have to pay that back. And if you happen to get laid off or let go, you're gonna have to pay that sooner rather than later. So there's some very restrictive things. And then the 7702 account can provide retirement income that never runs out and is also tax free. This is what I discovered after my father passed away. This is a case study. This 7702 account protected me if I got sick or hurt. So now I wasn't so concerned and I wasn't worried. I can remember literally that I would be very careful about what I did on vacation, how I enjoyed my recreation time, because I was concerned about what if I slip and fail? What if I did something and broke my leg, broke my arm? I wouldn't be able to work. Those were things that I was thinking about in the back of my mind. I wasn't fully able to live my life because as a hairstylist or barber, I was concerned about a situation that would keep me from being able to work. Well, guess what? After I discovered the 7702 account, I didn't have to worry about that as much because I knew that I was covered if I got sick or hurt. I also knew that, God forbid, if I died and passed away, that the 7702 account would pay off the mortgage on my house, and it would pay off whatever debts or bills that I had. It'll pay my final expenses so my family wouldn't have to worry about those things. I was actually able to use my 7702 account to open my salon and grow my businesses. You see how this works, guys? I was literally able to use money to open up this business that you see right here, Revive Salon, right? So I was able to access it early because I retired early in 2018. As you can see here, this is my last day in the salon. So you can see, guys, that this 7702 account is very, very powerful. And what I also did not realize when I retired in 2018, I did not realize that just 2 short years later, I would have to be one of the caregivers for my mother. My sister was the primary caregiver, but I was the secondary caregiver. And so in 2020, it became apparent that my mom would not be able to live on her own, and we would have to provide care for her. Unfortunately, she passed away just recently, but my sister and I was able to spend time, love on her, and care for her because we were in a position. My sister retired full time at 45. I retired at 51 from the beauty industry. But us having the freedom and the flexibility to just love on her, to be able to take care of her, was such a blessing. And I would not have been able to do that if I had not discovered the benefits and the power of the 7702 account. So, guys, let me tell you something. Nothing else gives you the freedom and the flexibility of the 7702. 7702 gives you stock market like returns tax-free. No risk of losing your money ever. You can access your money before 59 and a half, and also gives you tax-free retirement that never runs out. I was able to use it to have capital to grow my business. I was able to protect myself if I became critically ill or injured. I was able to protect my family and my assets if I passed away. I set my kids up, or if I had kids, I set them up to be able to transfer wealth onto them. I set myself up so I would have money for college to be able to help them for to purchase their first home or to start a business. And obviously, I was able to use that money as a tax-free retirement income that never runs out. So, by the way, guys, 7702 account is what's called the index cash value life insurance. And like I said, when my father passed away in 2003, this particular account had just come online in 1997. So 6 years later, I'm discovering the power of this incredible 77 index universal life insurance policy and the benefits and the various things that it allowed me to do. I'm such a believer in it because I know what it's done for me. I know what it did for helping me grow my business, for helping me grow my wealth, for helping me protect myself if I happen to get sick or hurt. For me, it put me in a position to be able to retire early and be able to help take care of my mother in her final days. Guys, this thing is powerful. And if you happen to qualify, if you happen to be someone who qualifies, you are actually able to do what's called a 5-year retirement plan. What does this mean? It means that you can actually make contributions to the 7702 account for 5 years. And then using what's called premium financing, like you would do for your car, like you do for your house or anything else, you're able to literally have the bank who makes contributions on your behalf. You contribute for 5 years. They contribute right along with you for 5 years. After those 5 years, they pay your portion and their portion. So now you are in a position where you only paid 1/4 of your entire retirement program. They paid the other 3 parts. You only pay 1 part. And that triples your retirement nest egg. And you're able to get set and you're able to be prepared for retirement in just 5 years. But I'm getting ahead of myself. I just want to share that with you. For example, if you happen to go alone and open up your own 7702 account, in this example, it says, hey, if you were to put in over the years that you're putting in money into your 7702 account, Let's say that you're able to contribute $165,000 into your account. Well, with the 7702 account, that 165 could grow to $840,000. And then between the ages of 65 and 85, you could get as much as $42,000 of annual income tax free. Now it says 65 to 85, but the fact is that if you have to live past 85, it continues. It continues on your behalf. But if you happen to use this 5-year retirement strategy, and if you qualify for it, if you put in 165, the premium finance companies will put in an additional $485,000 on your behalf. And as a result, that $840,000 would now grow to $1.5 million. And instead of you getting $42,000 of annual income, you would actually receive $75,000 of income each and every year, tax free. Guys, let me tell you something. This thing is powerful. So let me just tell you, you have two options. You have two options. You can keep doing what you're doing right now. If what you're doing right now protects your family, if you happen to pass away, if what you're doing right now allows you to protect yourself if you get sick or hurt, if what you're doing right now allows you to grow your money tax-free without the risk of losing it, if what you're doing right now allows you to access your money, right, without taxes, without penalties, and you have the choice of paying it back or not, if what you're doing right now allows you to have retirement income that never runs out, I would say keep doing what you're doing. But if it doesn't, I would say, hey, this is something you want to take a look at, because you never know what life is going to present you. Your responsibility, your job is to prepare today for life's tomorrows. That's your job. So I encourage you guys to take action, meaning go here to Candidly.com/Alex Allure. Schedule a no risk, no obligation consultation with me to learn more about how this 7702 index cash value universal life insurance policy can work for you and your family. So there you have it, guys. Again, I would love to answer any questions that you have. If what you're doing provides you all of those benefits, I would say, hey, keep doing what you're doing. But if it does not, you owe it to yourself and owe it to your family to get more information about this. And I would love to be able to help you and share with you the same things that it did for me. All right. So there you have it, guys. I hope this has been a tremendous help to you. Again, my mission is to help as many people as possible reach their financial goals and enjoy the American dream. And this can certainly help you do that. All right. So go ahead, Candidly.com/Alex Allure. Go ahead and schedule your appointment with me, and I'd love to see you and share this information with you. All right. Take care. God bless. We'll see you next time.